So the Fed came out yesterday, basically drop-kicked our portfolios. Today we're seeing a bit of a rebound, not as strong as I would like to see, but we'll take a look at that. We got initial jobless claims this morning. Those came in lower than expected, so that is good. We got GDP revision. That also came in slightly lower than expected. We'll talk about that and what it means as well. But first, let's look at the initial jobless claims. You can see here, this was from FX Street there, that initial jobless claims came in at 220K versus 230K. Basically, as long as this number here is staying basically on target or slightly lower, we're not really too concerned as long as that target is below 300,000. Once it gets above 300,000, it can really take off real fast to the upside, and that would be concerning. But the fact that it's coming in lower means that Jay Powell was sounding a little bit too hawkish yesterday, and that's really what drove us down, was his hawkishness yesterday. And then let's look at our gross domestic product here. So the revision today comes out to 2.8% growth, which is slightly lower than the expected 2.9%. So that's not ideal. But of course, anything over 2% is like for a mature economy, anything over 2% is on a heater. So we're really driving higher real hard. Even though that did come in lower than expected, we are significantly higher than what you would expect for a mature economy this year, and we have been for the last several years. The economy has actually been like super strong for years, even though it doesn't feel like it. That is basically it. Let's go get into some charts here so we can see MicroStrategy. I'm going to start with MicroStrategy today. Okay. It broke all the way down to this white line here. Okay. And it basically came down, tapped of the same low that it did back here before it came back up to about 442. If we were to do that now, that would be a 24% increase here, and nearly a 50% on the MSTX, which is the one I'm playing. But so we have some headwinds here. So we're below the 21 EMA, so that is not good. The 200 simple moving average is all the way down here at 189. By the way, we haven't touched that thing since September. I don't know when we're going to touch that again. I hope it's not soon. Anyways, we're looking at that. Let's bring up the 50, actually. Let's bring up the 50. That's number 3. Okay, the 50. So we could have a date with the 50. We could have a date with the 50-day moving average. I don't know when, or honestly if, because we did get close. We might just get close and then run away from it. But we could have a date with the 50-day moving average, which is close to the bottom Bollinger Band. Now, if we look here on the right, we've got the volume profile. We went significantly below this spike of volume right here yesterday, and we dropped all the way down to this little spike here, which is much weaker than this big one up here. Okay, keep that in mind. If we lose the 50-day moving average, we're going to fill this gap all the way down here into the 200s on MicroStrategy, and that is going to be catastrophic for a lot of our portfolios. That's going to hurt a lot. That's basically the line. The line in the sand is the 50-day moving average. We lose it, we enter this gap. We're going into the 200s, and we might not stop there. We might come all the way down to equilibrium down here and hit the 200-day moving average, and that would suck. That would suck real bad. I would lose thousands of dollars. Okay, thousands upon thousands of dollars. I'd lose if that happened. Okay. So I'm watching that 50-day moving average very close. You better believe I'm watching that thing close. We lose that thing for a day and we open a candle beneath that thing, I am gone. I am done with this trade. And I'm going to take my lumps and I will go and lick my wounds and return to this another time if that is the case. So watch that 50-day moving average. That is the line in the sand for MicroStrategy. It goes beneath that. We are going to have a horrific time. All right. Let's go look at some miners. All right. CleanSpark. That's so many drawings. So we're also kind of breaking this volume here. And just like on MicroStrategy, what the heck? Just like on MicroStrategy, I don't need all these lines. Hold on. Just like on MicroStrategy, we're in kind of this gap here. And if we spend too much time in this gap, we might fill it. We fill this gap, we're going back down towards the $9 range on CleanSpark. And that is going to be bad for holders of the stock. That's going to be bad for those of us in the warrants. This is going to suck. So we lost the 50-day moving average here. We came down beneath it. We went up, failed at that and the 21, and we came down. We need to get above the 50 and the 21 EMA on CleanSpark, and we need to do it fast. Okay, so we could end up doing something like a double bottom, like we did back here, right? We came, hit it once, and then went back up again, like so, bottom, and then we come up and do a bottom again here in the next week or two, and then drive up. If we drive above this volume spike here at 1234, we are going to hit the 200-day moving average at 1444, and if we conquer that, then we could easily find ourselves back up at $16. But right now the struggle is above the 50, above the 21 EMA. CleanSpark is in danger where it currently is right now. Okay, so that is not great. Things aren't looking super good. You can also see on average force that it's getting slightly better, but it's flattening out. The stochastics look wispy and honestly not great. None of this looks great. Okay, none of this looks great right now. Where's the market bias? We're basically right at market bias. Okay, we need it above that. We need it above all that stuff. Otherwise, CleanSpark's in a bad time and having a bad time. The warrants. You had your opportunity yesterday to get warrants at 80 cents. Okay, it's a bit higher than what I would have wanted to get them. I mean, I bought 1,000 at $1 a few days ago. My average now is somewhere in the 50-cent range, or somewhere like that. So I've got a lot of room to come down before I'm in pain on this one. So I'm just sitting and waiting on the warrants. Let's take a look here. Basically, oh yeah, I already have that line. Haha. So we're going to be in between these two lines here for a little while. I'd like to see it bounce off the 50 here. If it doesn't, 618 is all the way down here at 65 cents, where I have an order to purchase more of these things. We're right at the 21-day moving average. We really want to see this thing bounce. If this thing does not bounce, again, if CleanSpark goes down to 9, this thing's going to go down to that 65-cent range, which in my mind is a buying opportunity. But I see how people could be concerned about that and fearful versus seeing that as an opportunity. Personally, I see that as an opportunity. And of course, nothing I say is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. We are up 10% though. We are up 10% today, and we are printing something of a doji on the CleanSpark warrants right now. Let's take a look at Bit Digital. Bit Digital's up 0.5%. It came down. It's just so much chunky volume on Bit Digital. Honestly, I'm not terribly concerned. I hate that we lost the ascending channel here, and we are right at support. If we go any lower, we're probably going to come down to this white line, which is the 200-day moving average, down at like 317. That it would hurt. That wouldn't be very fun, and it absolutely could happen. If we go any lower, I'd basically say it is going to happen. But if we turn around, then no, it's not going to happen. So that's that. Right, we're right at support on Bit Digital. This is an area where I'd wait to see if some positive volume is going to come through for it, and if not, we're going to fall all the way back down into the low 3s on Bit Digital. Bit Farms went under $2, closed under $2, is still driving lower. I don't have anything else to say about that. That's bad. That's just bad. We lost all this structure back here. We're coming back to the bottom of the structure, potentially down in the 170s. So for those holding Bit Farms, you're having a real bad time. Let's take a look at Mara. How's Mara doing? Mara is not doing terrible. Not doing terrible. It hit the 50-day moving average, just like I was saying with some of these, and it's holding above it. As long as it holds above the 50-day moving average, we're good. And even if it loses the 50-day moving average, the 200-day is right down here at 1927. I think it'll hit 1980 again at some point, potentially, and then bounce off of it again. Now, of course, if it turns around and gets above this line here, this trend line, then it's going to shoot up to this trend line here at 25, conquers that. We're going right back up to the highs here actually we'll wipe that high out, so goodbye. We're going back up to the top ATR band area in like the 130s. Okay, so that is what we're doing. Hopefully it does not go all the way down to 1980. I'll take it if it does. I'd prefer if it didn't. Riot. So Riot's actually holding up better than its peers. It's above this volume spike here. It is above the 50, above right at the 20, right at the 21. Still in its chunk of support there. All right, Iron went a little lower than I would have liked. Right, it started to do my thing and then came down. Thanks, JPow. You ruined everything. No. So this one's, I think, is going to hit the 50. I think it's likely to hit the 50 at 11:43 before we see a turnaround on Iron. It's done that. Let's see, once, twice before. Why not a third time? And it's driven higher every time it's hit the 50. So if it hits this, it hits the 50. It'll drive higher. If it drives higher, it's going to hit that $18, $19 mark that I am looking for, and that is where I'm going to sell it. Okay, I've been saying that over and over again. Don't be surprised when I sell this thing at $18. Okay, don't come in here and be like, oh, I can't believe you sold. It's going to go so much higher or anything like that. I am going to sell it at around $18 to $19. That's that. It's going to happen. And if you're continuing to hold at that point, that's your prerogative. I think that the risk is a bit high for me at that point. Now I do see this bowl here that could turn into a cup and handle. I do see it. If we show some serious strength at $18-19 off that cup and handle move, yeah, I'd consider holding it still, but that would be something that would have to come at that time, and I'd have to analyze it at that time. See about CoreZ. CoreZ is, it's below the 50. This one doesn't look good either. It's below all this volume here. It's below the 50. I think CoreZ has a date with the support down here around like 13-ish, like mid-13s. See how we came into this gap right here on the volume profile and just all the way. We could come all the way to the bottom of it in the 13s. So that's what I'm looking at for CoreZ, unless it turns around real hard. Wolf. It's holding up real strong, actually. Wolf is holding up really nicely compared to its peers. Much like Riot, it's below the 21, but it's holding the 50. As long as it holds the 50, I think Wolf has strength. If it loses the 50, then it's going to be kind of a long drop down for Wolf. Let's take a look at Hut. Hut holding the 21. Okay, Hut is the strongest one I've seen. It's holding the 21 and is way up there, and it's just kind of bouncing off that 21. As long as it holds the 21, this thing has room all the way back up into the mid-30s. It loses the 21, it's going to come down to the 50, down at 22.53. Okay, Cypher. Cypher hit the 50. As long as it holds the 50, as long as it's holding the 50, you're okay. It loses the 50 EMA. We're coming all the way down to the bottom of this channel, which right now is down at $5 for Cypher. Let's take a look at Hive. Hive is suffering. It hit this line here back in mid-November, and then it's just dump city all the way down to the 200-day moving average. I hope that is not something to I hope other miners do not take the lead of Hive on that one and come down to their 200s. That would be very terrible. This one, the lotto play, the gamble, the absolute dumperoo here. Look at it. It came all the way down into the low twos. I'm so glad I have such a small position on this lotto play. This thing is in terrible positions right now. This is like the lower support that you didn't want to see it hit. Who knows what's going to happen there. Yesterday it was actually holding up well, and today it came up back towards my bottom. Man, this thing sucks right now. Glad this is a very small position for me. Let's take a look at CAN. All right, CAN's likely going to hit the 21-day moving average. That's down here at 242. It loses the 21 moving average. It's going to drop pretty hard, all the way down to the 50, down at 194, and the bottom ATR band potentially at 173. So watch CAN. CAN took off like a rocket. It looks like it's trying to make a double top. It likely will hit the 21-day. We'll see what it does there. If it bounces, you could assume that it's likely to come back at least up to this line here after the bounce, which would be around like 289, 290 is. But if we lose the 21-day moving average, there's nothing there to catch us all the way down to the 50. And even at the 50, it's a bit flimsy. It's more the bottom ATR band where we get into this volume here on the volume profile at 164-ish. That would be the area I'd be looking at. So CAN is in a precarious spot right now. It looks like it's trying to make a double top. It makes that double top. It's going to come probably all the way to the bottom of the range, which is in this case is going to be all the way down in like the 160s. Okay, so watch that. If you rode this up, don't lose it on the way down. Okay, pay attention to it. Watch these lines. If they break, don't become infatuated with the idea that, well, the high was all the way there. All it's got to do is back test that and come all the way back down. Sometimes they don't. Sometimes they don't do that. And they just burn all your gains all the way down, and then you're doing another round trip. I hate doing round trips I don't need to do. All right, and of course, nothing I say is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. Look at this average force; it's coming down. That's not good. The stochastics are pointing the wrong way. It does not look good for CAN today. Let's take a look at BitDeer. BitDeer is actually down today a little bit. BitDeer closed underneath the 5. It is now also trying to be below the 5 again today. This one's going to hit the 21 as well. The 21 is down at 1739. This is the exact same story with CAN. Okay, exact same story. If it doesn't bounce off this 21, here is a double top, and I'll paint it out for you here. Top, there's the neckline. Top, we come beneath this neckline right there. We're gonna hit that 21. We hit that 21, and it doesn't bounce. It's coming down to the 50, and you know what? There's not much there at the 50 either. It's gonna come down to this spike right down here around 1140 something. So if we lose the 21, we're going to hit the 50. We're going to wick below it likely to this spike here of volume around like 1160 to 1150 area, maybe 1140, 1160 to 1140. And that is going to equate to a loss from the top of 56%, which is in line with what Bitcoin miners often do. So do not be surprised. Do not get caught holding the bag. Do not do a second round trip on this thing. If you see it break down, it's breaking down. It's not lying to you. Like, it's not bluffing you. If you see it breaking down, it's breaking down. and I'm watching the 21-day moving average for that. Honestly, I'd be a little weary if we lose the cloud here, the red bit. If we lose that, I'd become pretty weary. But if we lose the 21, that's basically a clear signal that we're coming down to this volume spike down here in the low, in the mid 11s. Okay. Bitcoin still holding over $100,000. That is fantastic. That's exactly what we want to see. Okay, that's exactly what we want to see. It's holding above the 21-day moving average. As long as this thing is holding above the 21-day moving average, many of our miners are likely to hold on tight to where they are and hopefully not do complete collapses of their value. But the fact that it's holding this strength above $100,000 after yesterday's absolute just assault, it's fantastic. It's really good to see that. Actually, that makes me happy. It makes me feel good about this. How is Bitcoin doing right now compared to its average? We're actually above the average. The average move for December is 5.49%. We're actually at 6% right now, so that is fantastic. Where were we in the last halving year? We were at up 46% after being up 42%. So we are a lagger there. We were also a lagger last month compared to that way and compared to the average. So that kind of sucked. Bitcoin, get it together. Do better. Anyways, and then in 2016 was the halving before that, and that was in December up 30%. So we could see a significant rise in the next couple of weeks here on Bitcoin. We have in the past in halving years, and we could this year. Honestly, whenever it's green double digits in December. So we could easily move at least another 4%. We could see ourselves moving another like 20% with ease this month, considering it's a halving year. And when December is green, it's big green. Okay, so we've got at least twice the move left than what we've done so far on Bitcoin, and we could see more. Now that doesn't mean it's guaranteed or anything, but halving years and green years for December in Bitcoin tend to be great. Now, what do we want to look at? I want to look at ETH. ETH is important to look at. So Ethereum is actually often down in December, right? It's often down. Its average is plus 7.8%, but its median is negative 0.77%, which is exactly where it is right now. And Ethereum measures the altcoins, right? And the alt season. And you know what also participates frequently in the alt season? Many Bitcoin miners. Now, what months are fantastic for Ethereum? January, February, March, April, May. Basically, the first half of the year is fantastic for Ethereum. What does that mean for Bitcoin miners? It means that we're probably going to see a top in January, maybe in February for the Bitcoin miners. That's when we're likely to see that strength return. That's likely when we're going to see these things stop underperforming. When Ethereum starts performing, we'll likely start to see the Bitcoin miners perform. So a lot of people that are down in the dumps, a lot of people are like, oh, this is over. This is the worst trade I've ever made. Well, just a little patience, little patience. They tend to act like altcoins. Ethereum is an altcoin. Ethereum tends to hit its stride in January. We're not there yet, okay? So a little bit of patience is going to go a long way likely here in this. And now, of course, like I said several times, nothing I say is financial advice or a suggestion to buy, sell, or hold any asset. These are simply observations of trends and patterns from history. They don't need to repeat. They often rhyme, but there's no need for them to repeat. This could be an absolute dumper of a month coming for us here in January and February, depending on factors out of our control. I'm simply stating that Bitcoin miners often react similarly like altcoins. Ethereum is the altcoin, and it tends to perform in January, February, March, like that first 3 months of the year, and sometimes going into April and May as well. So that's what I'm looking forward to. I'm looking for forward to a fantastic January, potentially a good February. I don't know, though. I'm holding up to the inauguration. After that, I don't know. Everything kind of like, I don't really have much thought about what's going to happen after that. So I'm looking for kind of a move up in January. Hopefully, maybe a continued move up in February. We'll see. But I'm going to be holding for now on many of these positions that I am in. I am up still decently. Hopefully, you are too. And with that said, please like, comment, subscribe, share this video. Check out the Trade Cave store. Link in the description as well as the channel bio. Don't sleep on the sticker shop. That is also in the description and channel bio. And have a profitable day.